Hi there, Serial Trader here. I'll do a weekend update on the major US indices and looking at the hourly chart here on SPX. So not much has changed since the last video. I believe we've begun a new downward trending wave here, but there is still some questions here that need to be resolved to really gain more confidence. So just a quick update. I'm still short from 29.30 on the S&P mini futures. My stop's at 29.20. So if this does unexpectedly come up here to those levels, I'll be stopped out with still a 10-point gain, which isn't large, but it's always fine when you can walk away with no harm done. But I think in the more likely scenario currently, we're going to top out very soon here, probably near current levels, and then roll over again. So what I'm still working here is that we have our top in place for potentially wave 5 of C of X. That wave count is certainly subject to change, but currently that's the one I'm running with. And then we've got our initial 1 down, 5 down for 1, ABC up, so 3 up for 2. And I think that we have another 1, 2 in formation here. So I suspect that we have our wave 1, 2 of a larger 3. And let me just drop the degree down on this and make some adjustments here. Hang on there, just let me make it proportional looking. Okay, so if we top out in that smaller 2 pretty quickly here, we'd be looking for a 3, then a 4, and then a 5 for the larger 3, and then a larger 4, something like this. And again, these are just placeholders. They're not trying to predict, the price levels and the timing, but just basically the rough layout of how this could unfold if we are in fact doing a third wave down of some degree. So this is what we're looking for. We're looking, and you can see a few things to point out. So this channel, we've come up to the median line of the channel. So that'd be an interesting place to top out and fall from. And also just a fib retracement. So from our high down to our low here of this wave, you can see we're right in between the 50% and 61.8% retracements. So that's certainly a common area to top out here in a smaller second wave, and then look for that smaller third wave down. And obviously, the critical level to hold is 29.45. If that gets taken out, then bottom line, we're going higher. And the critical level to take out is 27.66, 64. If we take that level out, then we're probably going quite a bit lower. So right now we're just right in the middle of those ranges, roughly. So if you're not already involved in a trade, you could just kind of wait to see what happens. Now, obviously, I'm short the futures from higher up here. My stop is, going to capture a better than break-even trade if it's wrong, so that's fine. I'll leave that position on. But if we do take out that 29.45, I'll close my July puts, because that would argue we're going quite a bit higher. And just let me just give an example of what I mean. Okay, so just a relatively bare chart here. But from our high there at 29.54, what if this is just an ABC down? So far, you can make the case, because we're still contained within this channel, and other than stabbing out there briefly, we're largely still in this corrective price channel. We haven't actually broken down out of it yet. Now, obviously, I am leaning towards that being what's going to happen next. But what if it doesn't? And if it doesn't, and our low is in place already, if this is the case, and if we made the low at 27.66, then let's just do some reverse fib targets for an upside move. And if I just drag us down here a bit, so if that low is actually in place, and we're going to take out this level here at 29.45, if that's going to happen, and we're going to break out above this channel, then we're looking at 3,026 for the 1.32 reverse fib, all the way up to maybe close to 31.50 if we get to the upper target. Now, again, this is not what I think is going to happen, but if we just keep going up and we take out that level, then those are some upward targets to look at if you want you want to try and trade it on the long side. Now, again, I don't think that's what's happening at all, and I'm heavily favoring this interpretation, but it's good to have it in your back pocket. If you're wrong, then you can flip, go long, and try and make some money that way. Currently, though, I'm definitely liking this interpretation. I mean, if we go in on the 15-minute price chart, this doesn't look like a 5-wave sequence up. You can see there's a lot of overlap here. So if I were to try to label this an impulse wave off the bottom, well, okay, what would that be? Our initial wave 1, that's our wave 2. Is that a wave 3? Oh wait, wave 4 overlaps with wave 1, so that doesn't work, right? So right there, the fact that you have this choppy overlapping action, I would hazard a guess that this is not an impulse wave forming off the bottom, and in fact, it's a corrective wave. And if I just do a little labeling here, I would suspect maybe we got an A, B, C up, and let me just adjust the degree, of course, here. Let's see where we're at here with our degree. Okay, I think we'll do a little ABC up there. And then we probably got a larger WXY forming. So just bear with me here. Let me adjust the degree appropriately. Okay, yeah, that'll work out there, sub-minuet. And let me just complete the labeling. So we'd have another little ABC down for that larger X wave. And then possibly that other ABC up for that Y wave. So that looks more realistic to me, that this is a choppy corrective, potentially WXY formation, as opposed to a new impulse wave off an important bottom. That's what it looks like to me. I certainly can't get a clean 5 waves off the bottom, which means this is likely corrective. If it's not a 5, it's a 3. Okay, so yeah, that's definitely what I'm running with. Back to that hourly chart, expecting this to top out right away from around current levels, and then we're going to start dropping. Now, obviously, if we get below that 27.66 and really break out of this channel, then we got something more impulsive to the downside developing, which is what I'm currently leaning on anyways, and more shorting opportunities to come. But right now, again, we're still in this channel, basically right at the median line, so if you're not already in something, you can certainly just wait and see which way it wants to break. I think that there will be follow-through if it breaks 29.45 to the upside, and I think there will be good follow-through if it breaks down below 27.66. So if you just simply want to buy the breakout or short the breakdown, that's a reasonable approach, being that we're just kind of in the middle right now. Okay, so that's what I want to go through there in SPX. Obviously, I'm still leaning bearish, but certainly I'm open-minded. If it does go higher, I won't hesitate to attempt a long trade on that. Okay, now on the thinkorswim charts here, looking at the candlesticks, so we had that nice bearish engulfing. Now we are getting below the daily T line, and you can see even with our bounce up, we're basically just sitting right at the T line. So if the T line becomes resistance now, where it was serving as support on the way up, that'll be a nice sign that a bearish trend down is developing. If we look at the weekly chart on SPX, we had the bullish engulfing candle last week. Now we've actually gotten below that bullish engulfing candle this week. Obviously, we've rejected those lower prices for now, but basically invalidated the candle by taking out the low of the bullish engulfing candle. So this weekly chart still not really showing its hand. It's still just in this sideways range for now. You could argue this is another potential hanging man candle, but again, we really need to see it break down before we get too excited about the weekly candles here. But on the daily, I like that it's kind of looking for potential resistance here at this daily T line. If we can just fail from current levels, that'll be a nice bearish signature. And if we look at the Dow Jones Industrial Average, very much the same idea there, finding resistance at the T line. So far so good. You see that little bounce off that 50-day moving average. Not unusual to see the major average like that initially bounce off of a key moving average like that. Okay, now on the weekly chart for the Dow, weekly similar situation, possible kind of hanging man candle, but again, we need to see more to the downside to get too excited on the weekly. Okay, so on the NASDAQ composite, now NASDAQ continues to show a little bit of relative strength because we are slightly above the T line once again. But if I just go with that 10-minute chart, sorry, a 10-minute chart on the NASDAQ, I hope you can see what I'm seeing here. And we got a clean 1, 2, 3, 4, 5 down, okay? Or you could even say 1, 2, 1, 2, 3, 4, 5, of 3, 4, 5. So we have a clean impulse wave down, 5 down. And this action off the bottom, I mean, look at this. Extreme chop, overlap. This is not an impulse wave off the bottom developing. So very likely we got an initial 5 down. We're working our 3 up. And if I just do a little fib retracement here on the NASDAQ composite, and look at that, we're sitting right in between the 50% and 61.8% retrace. Not an uncommon level at all for a potential wave 2 pullback. Okay, so I really want to point that out on the NASDAQ, that it really looks like an impulse wave down and a corrective wave up. So certainly looking lower there, despite looking a little stronger here on these daily candles. The wave count certainly suggests more downside. Now on the NASDAQ weekly, what do we got here? This is basically a huge doji star, and I suspect that's a reversal candle. So a big doji star at the upper end of the range, and I think that's going to signal that we got a top in place and we're rolling down here. Okay, that's probably the best weekly candle as far as a message here on the NASDAQ composite. Very indecisive, kind of reversal looking candle. Now a doji is always more significant when it's at the extreme end of a trading range. So if you just have a doji in the middle of a range, it doesn't mean much. But when you're kind of stretched either up or down and you get a doji, that can be a pretty good reversal signal. Okay, that's really what I wanted to go through there on the NASDAQ composite. So key message, certainly looking lower there. Again, as long as we hold the top at 92.50, 96, that's the key level to hold, to stay bearish against. And looking at the VIX, I want to look at the VIX here. So VIX got a little action, didn't quite break that previous resistance level, which was at 40.32. We went as high as, let's see here, 39.28. So VIX hasn't officially broken its little downtrend, but if we can find support here pretty quick and get going and get above that 40.32, then we officially have a new uptrend in development for VIX. So watching that intently. And on the VXX ETN, an interesting pattern here. So we got a nice move up. We've come down. It looks like we may be finding support on this blue moving average, which would be a good sign to further upside. And there's also a little inverse head and shoulders pattern developing. I'll just point it out here. So if you just follow along, this would be our left shoulder, our head, and this is the right shoulder. And then obviously the neckline would be up here. And then if we get a, let me just draw the neckline there. So neckline kind of like that. And then if we get a break, just do a measurement. If we get a break above the neckline, your inverse head and shoulders target would go something like this, measured from the neckline. So you get a pretty nice move up there in VXX if this little inverse head and shoulders pattern works out. Just thought I'd point it out. Definitely caught my eye there. And okay, so that's really what I wanted to show on VXX. Now on the VIX VVIX tool, let's just check in on that. So we had that nice VIX VVIX divergence. Then VVIX got above the red moving average. SPX got below the blue moving average. So the sell signal is still on. We've just come up potentially to find resistance now at that blue moving average roughly. And VVIX has pulled back roughly to its red moving average. So looking for that to continue, looking to roll back over on SPX and turn down, looking for VXX and VIX looking for VVIX and VIX to turn back up here, essentially from near current levels. But the sell signal for now is still on. All right, should be interesting next week. Either we top out essentially near current levels and turn down again and begin that larger third wave down, or we unexpectedly go up, take out 29.45, and we're going, probably well over 3,000. Obviously, I'm leaning towards the bearish scenario, but let's see what happens. Price will decide. All right, have a good weekend. Serial Trader signing off.